The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, David White. And getting ready for the big weekend. I remember when I lived up north, it was kind of the start of summer and the official kickoff. I remember just how excited I was to get to the water and do some boating after a tough winter. And, of course, how sad the drive home was come Labor Day weekend and school starting again. I always remember that. Of course, now kids start school August 15th, and they've got, about 8 weeks of summer. I don't think they're going to love summer the way I did. But what can you say? We've got a market that is up higher, not unexpectedly. It's been kind of tough to dig through a lot of this, and one of the reasons why I've been out of this market and been all cash. I wrote about it a bit in the newsletter this morning, but it's important to be able to get your head clear, especially when the market's probably not going to move extensively. We are up 7 points on the S&P cash. But very, very light volume, which is expected on going into a 3-day weekend. Under 1.7 billion shares as we start the show. So not a lot happening and a quiet day. One of the tenets or old chestnuts that everybody dusts off is don't be short a quiet market. And one of the reasons why I'm all cash, you can't make that much. There can be huge surprises. The entrances and exits are incredibly narrow in this light volume. And if you get caught on the wrong side of it, a lot of times a good way to cut back on some of your profits for the year. I would rather spend a lot more time not on vacation, but reading books. I've been reading Reminiscence of a Stock Operator again this week. I've been looking at some of the other books, programming some, writing some, and spending my time getting ready, as I said this morning in the newsletter, waiting for the whites of their eyes. And I think we're going to see that when we come back Tuesday. It may take a couple of days, and I'm looking for some kind of spike. I would love to see all the people that are short right now get shaken out of the market, have very little in the way of support down below, and then the market give it up. What I hate now is probably 50% of the people on financial infotainment cable stations are saying be worried, which makes me more bullish than anything else. And while I don't think we're probably going to go much higher, I think we're going to go enough to shake the shorts out, get everybody all hot and bothered only to roll over. This light volume that we've had on this push-up is problematic. One of the things that I learned early on from some of the guests at TFNN when I was an observer and not a commentator around 1999 or 2000 was Tim Moore talking about how either stocks or indexes just hang out at highs. They are going to break them. It may be a false breakout, but if you hang around here long enough, you're probably going to break out, and you're probably going to gap up, and either you're going to roll over fairly quickly, and that'll be it, or you'll go up a little higher and pull back on lighter volume, and it'll be a legitimate breakout. I don't know which one of these it's going to be, but I am banking on some kind of at least spike. That spike would probably be sold or shorted, and if it pulls back on lighter volume, then you can feel real good about holding it. Buying to retrace and going long, or it comes back on heavier volume, and everybody sees that the top is in, and you continue to hold your shorts. So it's I'm looking at the scenarios when we come back and what's going to happen when we do come back. But I think Tuesday, I would love to see that pop. I would love for the people that are short this weekend to basically cover, have a market without a lot of shorts, and that's it. Now, part of the problem is that we've got the Wall Street bankers who make a huge amount of money, all foaming at the mouth on these IPOs. We had a bunch of them dropped again that didn't get out the door over the last couple of days. We had a few that did get out the door, but at much reduced prices. And we've got a couple of Chinese stocks not doing that well today. So it is problematic at best. This is not a great market. But at the same time, I see just a little bit too much bearishness. And just as they say, it's just darkest before it's, what is it? It's just dark before it's totally dark. I'll have to think about it. It's just darkest before the darkest. Anyway, it is one of those things where I don't like to see a lot of people short a market, because almost indefinitely the easiest thing to do for somebody at the highs, if they're a stock operator, is to come out with a bogus upgrade with call the CEO, get him to run it one more time. And instead of trying to sell it into a market that you can't sell into, you sell it in a market that has natural buyers, and that's all the shorts that were pre-short your bogus upgrade, your huge story that is somewhat dubious, and then the market rolls over and you always wonder why you shorted just a little bit. It's always darkest right before it's all over. That would be it too. But I just can't see going in to Tuesday morning being short. I think we're probably going to see a lot of engineering trying to keep this market up. Alibaba looks like probably a late, they're saying the 10th, around the 10th of August is what they're shooting for. I don't know if that's even a date. What do we have? April, May, June, July. I guess it would be. Well, I guess maybe they're talking about the week of the 10th or the 11th. As a possible first date for that going public. The amount of money that would be made over time, not probably instantaneously, but over time, could be as much as $20 billion for Wall Street. That's a lot of money to slosh around. Literally everybody on Wall Street's going to get a taste. There is some water to wet the beak of every person that works in and around finance. Every bank's going to be involved. Everybody's going to have to take some shares, and it's going to be a huge IPO. Now, the question is, can they keep this thing up? There just isn't any momentum. We're going into light volume. Could they just keep pushing this thing a little higher each day? That is a possibility. I've seen it before. But I don't think that there's too much risk to the upside. But again, if we could get a nice little gap up in the morning, something like 20, 30 points on the S&P cash. See a lot of people, maybe it takes 3 days to get the margin people out of the way and then roll over. That would be my dream top in this market, to have nothing but everybody yelling and screaming about the absolute bubble. You better be in it for the next 2 or 3 years. We're only going higher. And I'm getting kind of a little bit more sanguine read of Bloomberg and CNBC and Fox Business News, and I would rather see it a little bit more euphoric. I think after a big weekend, we might be able to get that kind of euphoria, and it is that. But I think we're close. I would just like to see that shakeout. Normally, when you hang out at these highs, and you don't back off them, and you come into a light volume, there's always one more push. And that push is the one that gets shorts that are early out of the way. And then that's when the market can really fall, because there are no natural buyers. There is then just natural sellers. And that's once everybody's figured out that the jig is up, Wall Street will come in and sell. There'll be no end to the amount of selling that they'll move this thing along with. So anyway, up 7 points, 1.7 billion shares. I'm probably figuring if we get that tomorrow, I will be amazed if we can get 1.7 billion by the end of the day. I suspect we're going to have probably 2.5 billion shares for today. And you certainly, or if you're bullish, didn't want this market to push all the way up on light volume into Friday's close. So it is a bearish signal. Probably 75% of the time, the market's going to take a different turn. But we've been incredibly choppy. I suspect that we will have a good trend to hang our hat on, whether it's long or short. I think we're probably going to be starting some kind of long-term trend when we come back next week. So we've got that to look forward to. You got that. Anyway, you can always give me a call at 877-927-6648. That's 877-927-6648. And you can email me at path@tfnn.com. Remember, tomorrow I will be in the studio, so you can't email me. Friday emails, no. But today, yes. You can also post messages in the den for me. And, of course, email me at path@tfnn.com. So let's get into it. A little bit of history. For those people, I really got probably wound up in the market probably about 1995 when I first started trading. iOmega was the maker of zip disk drives, and I was using a great deal of these at the time. So I was involved in one of these first bubbles. Becomes the first love child of the internet investing boom, boosted by individual investors egging each other on in a newfangled forums called chat rooms. This was mostly on Yahoo for those people who weren't not around. And bulletin boards. The stock hits $27 a share, adjusted for 2 stock splits of previous 4 months. Even though it's followed up by almost no Wall Street analysts, stock's up 2,100% over the previous year. Unfortunately, exactly 1 year later, iOmega stock will end up at $8.62, a 68% loss over the next year. And if you watch CNBC long enough, they'll occasionally dust it off. But all anybody wanted to do was call up and bug people on CNBC about what was the latest price or tick on iOmega. They called them iOmegans. But really the growth of Yahoo's chat room, people like Tokyo Joe, if you're not familiar with them, running stocks. This was the beginning of the heyday of the dot-com bubble, and you could start seeing it, but iOmega was the first. It was the one running around. iOmegans and Tokyo Joe. Oh, he was a dude. Well, maybe I'll talk about him when we come back. Anyway, be back in just a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, Visit the front page of TFNN.com.
Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, kind of an interesting time. Omegans, Tokyo Joe. If you Google any of these, you'll find the Wild West days of stock trading, beginning of the electronic trader. Of course, before about 1996, you had to go through a broker. You had to call them up, place your order. That's really when we started seeing the Daytex of the world, some of the other Ameritrades, and there was another one. What's the guy's name? Not Scott. Yeah, anyway. But you could start trading through the internet, and that really changed everything. Of course, we saw all these hucksters, or a lot of them, coming on board. Of course, an excellent idea to show what's going on. Of course, Tokyo Joe later pleaded guilty to fraud. He was always buying stocks 1 or 2 days ahead of recommending them. And he'd give 2 or 3 good recommendations, and then the 4th he'd just load up on and pop the stock, sell into it immediately right after recommending it. And he was buying huge amounts of calls, sometimes puts on these stocks. And did he go to jail? I can't remember. All I remember is he pled guilty, was not able to ever recommend another stock, although they didn't make it so he couldn't trade again, which is, I thought, very weird. But that today in 1996, the huge move in Omega that started it. Around the world, the FTSE, pretty much flat. Germany, 2/10 higher. France, I can't even say it, France's CAC up 2/10, and Nikkei was up 2.1%. 0.5%. Hong Kong Hang Seng up 0.5%, and China's Shanghai Composite is off 0.2. So not a lot going into this long weekend. Dollar index is probably the most interesting thing out here. Over the last few days, this thing's trying to hold that $80 range, and I don't know if this is more of an issue as we go into the weekend as to maybe just putting cash in dollars, why the U.S. stock market is closed for 3 days. But it's hard to say. But certainly looks like it is trying to get up there. Of course, gold's up about $6 too, which is kind of interesting for watching the actual dollar index, which is trading out now at $80.30 on the current contract. Some of these stocks getting walloped today was ITT Educational Services. I'd been short some of the stocks in this sector, just hadn't given them up yet. Certainly ITT did today. ESI is the symbol on it, and what was it, down 25%, something like that. Just all these companies in for-pay education, pretty much shams. And, of course, this one is the announcement, or this drop here and blowout of the $22 level is all about whether or not they can do the counting the way they wanted to, and also a whole bunch less students coming in the front door for this fall, and that's really hit them hard today. Other stocks showing some weakness is 58.com. And again, we're talking about why people are getting out of some stocks that you would think that they'd want to be in, like Yahoo or this Alibaba IPO in China. Of course, 58.com, a big Chinese Amazon-like company, missed their earnings fairly significantly. Weibo, another one of these, off fairly decently. And I think this was off almost 10%. It hasn't broken down. Of course, this is a recent IPO, and this is what's got a lot of people worried about the market, is what would happen when Alibaba comes out and it sucks up all the oxygen in the room. Does that mean that every one of these other IPOs that's come out the door, everybody sells them to get into the Alibaba one? And I think you can probably make a good case that most people, or a lot of people, are going to be saving up their cash for the Alibaba IPO, and most of these other companies are going to be also runs. But maybe give us, by the time Alibaba comes out the door, if it's probably highly overpriced, maybe it does a Facebook, and maybe you get a chance to buy some of these Chinese companies at a discount. Right now, I can't say that any of them look that good. But, of course, Chinese numbers for economy still coming out and pretty much poorly. Anyway, we'll be back in a minute. Give me a call, 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And we're coming back, and just a few other things that were before we get into some charts out here. TripAdvisor.com, it's up about 3% today. But we had some news. I think probably not going to drive a lot of these stocks very far at all. But continue to see legal obstacles for a lot of these companies that have online posting of reviews like Yelp, TripAdvisor, Angie's List. Angie's List not so much yet, but I have a feeling that probably going to see some of the same thing. And that is on TripAdvisor less than a month ago, an anonymous user posted a very unflattering review of a Lincoln City hotel. The hotel has filed a suit for $75,000 for defamation, an attempt to stop the reviewer from posting again and driving away business. From all the reviews of this particular hotel, probably not a great one. But probably not the pit of Satan's spawn, as the reviewer said, rather vitriolic. So they probably had a bad time. But no longer, pretty much Yelp has lost 3 cases now where people that wanted to sue the reviewers of some restaurants and what was the other one that they had? A dry cleaning place. But a couple of restaurants and a dry cleaners had all had people posting and were the competitors to those and trying to make them look bad, make their businesses look good. And that's become the real problem of these reviewers. What kind of agenda do they have other than just truly being ticked off? Apparently, this is the first big case of where somebody just really, truly hated the hotel and wasn't a competitor. But this is going to case, and of course, they're going to have to hire an attorney. It's going to at least cost a couple $1,000s for the people to do so. And the question is, can you, as a hotel, have substandard service and just go around suing people so they don't post bad reviews about you, or maybe the place was that horrible? The question, though, is now, since you really can't post anonymously, do you really have to document everything you have? If she took pictures, and I think it's a lady, if you took pictures, you did a lot of this stuff, it's going to be problematic at best to get a lawsuit through, because they can just claim First Amendment. You've really got to show that these people wanted to hurt their business for no other reason than wanting to hurt their business and not a really bad stay at the hotel. Some level of hyperbole is allowed, but at the same time, basically the people that did the review have now lost. They're not going to get that cash back that they paid their attorney, and I'll guarantee you, just to start, the attorney's going to ask for $2,500. So what is the future of these without anonymous posting? It is going to be somewhat tough, but Yelp, Angie's List, Facebook, other places like that, what your words are going to have consequences, and it's really going to hurt probably Yelp and Angie's List. Had a question in the den, was there some controversy about likes on Facebook? A whole different issue with that, and that is that Facebook was doing the exact same thing they were telling you not to do, which was hiring click farms to like your web pages, and it actually made it worse. There is a channel on YouTube called Veritas, and if you do Veritas Facebook fraud and Google that, you'll find up with a nice video that about 12 minutes long that talks about the problems of the way Facebook actually advertises. I think that they've got some huge problems, but that's a bigger issue, which is if you run a newspaper and you say, hey, I've got 100,000 subscribers, you've got 50,000 subscribers. That's kind of fraud, but it seems to be done a lot in print advertising. That's kind of the same kind of thing that I think we're talking about in Facebook, and that is basically paying money and getting nothing out of it, or very little, or in some cases even worse, it working against you. And if you watch that video on Facebook from Veritas on Facebook fraud and likes, I think you'll get a much better idea why I think Facebook has its own set of unique problems separate from just writing about these. Let's get small. Intel came out today. They are saying that their 10 nanometer forecast is right on schedule. If you don't know what 10 nanometers is, that is the spacing between transistors and leads on a chip. Each time you make the chip smaller, it uses a whole lot less power, creates a lot less heat, and can be a lot faster, because even though electricity moves at the speed of light, that those chips are so fast now that it is a problem if it has to move yet another quarter inch across silicon. Anyway, Intel is saying that they're looking for 2015 or early 2016 to see 10 nanometer chips out there. Basically, you're looking at, for the most part, they're chips using 22 nanometer right now. Going to 10 nanometer would probably drop the power requirements another 70%, although they haven't made any any announcements on that. But from what we've seen, from 45 nanometer to 30 to 28 to 24 to 20 to 18 to 14 later this year, I think we're probably going to see at 10 nanometers another quantum level of power usage that's lower. And it's going to be extremely important when more powerful laptops and more powerful tablets come on the market. And Intel is going after that business. The question is, are they only going to be for sale in the Lamborghini kind of laptops out there, and the super cheap $100 models still being very easily available from people like Amazon? But talking today from their annual stockholders meeting, still on schedule. And that's about it for those. So, yeah, okay. Let's see if there's anything else out here. Okay. Just looking through the news here and seeing if there's anything really, truly moving. I think there was a few stocks I wanted to look at. We looked at Weibo. Wanted to see if there's something else out there. Probably a few other stocks. Wanted to see how they were doing today. So we'll take a look at that. Wolverine Worldwide is and did test its low yesterday. These are a few of the charts I had in my newsletter this morning. We were looking for these high volume lows to get challenged. And, of course, on a day or days like this over the last few days, probably expecting lighter volume. So some of these are going to act as the first level of support. And if it's going to, things are going to get worse, it's probably going to take some time to build up some energy to break these lows. The February 19th low on Wolverine, $25.13, 4.2 million shares. You went below it yesterday with 820,000 shares, or 25%. Not a big stretch of the imagination to see this thing pop a little bit, but of course, no volume. Wolverine Worldwide designs, manufactures, and sources footwear, apparel, and accessories. Wolverines. Wonder if they have little claws or metal spikes that shoot out of them like Wolverine on X-Men. Probably not. But it is that. Oh, Hush Puppies. Is that who they are? Okay. Didn't really say. Oh, yeah, it does down here. It says boots and sandal, various brand names, including Bates, Cat, Chaco, Cushy, Harley Davidson, Hush Puppies. Ah, there they are. High Test Kids, Merrill. Ooh, Hi Kids. I used to have those as a kid. Soft Style, Sperry, Topsiders. Oh, they've got everything. Anyway, kind of a nice low out here. And, you know, if we didn't have such light volume, this would be very attractive. So there are some stocks out here that at least have kind of a floor underneath them, if nothing else. Let's see what else we have out here. OMER. There's some actually, like I said, not doing it too bad. GLID. Can we look at that? We can real quick, and then we'll go back to the other one. Gilead. Okay, you're going up against 17 million shares in Gilead from the January 22nd high at $84.40. 17 million shares. And we got into it again with 9 million shares, and that's where it fell apart. You're coming back up one more time. Energy is really fairly decent, but what you see is once it got to about $76, this thing has been dropping out of energy very, very hard. And, of course, another day up with a very light volume out here. What you would love to see is Tuesday morning for this thing to spike up, maybe gap up, 86, 87 bucks, something like that. See all the shorts get squozen out of this thing, see the volume go real light late in the day, and then start fading, maybe in a couple of days, maybe Wednesday, Thursday next week or something, and then see this thing really just roll over. But the gap up and close back below $84.40, a close below that would confirm a false breakout, and it would be very interesting. And this thing probably wants to get back to 75 bucks on any failure fairly quickly. So you probably could have a decent trade out of the thing. And Netflix, NFLX. Because Netflix came out with some news over the last few days. They are expanding into Europe and some of the other third world stinkholes around the world. Not that Europe's a third world stinkhole, just where they don't shower, which is mostly France, I guess. You've got the break above 380.88 in Netflix. That was the last reaction off the huge slide down. 9.2 million shares that day. Yesterday you had 5.7 million shares. Today you got 3.8 million shares. I would love for this thing to squeeze probably up to where this thing fell apart back on the left-hand side of the chart, which was March 21st, when this thing really started seeing volume down. That would take you back up to 428.34. And I have a feeling if we spike up on this, that's where I'm going to be looking on the ledge to pull the trigger short on this thing. You have a high volume low in it. You've got just about everything you want in it. Unfortunately, I think that when I've been looking at the short interest on this, it's still a little high. And that's what makes me think we're probably going to get those shorts out and squozing out. You might not get your perfect Fibonacci on this, but if you do get that nice gap up of 20, 30 bucks on this thing, and it just goes sideways and the volume really dries up, you're probably just seeing the end of short covering. When that short covering is over, it's probably open season again on these stocks with the 3 gap plays. Okay. Intermune, another one of these. I would call it a biotech. I don't think you call it a biotech. Yeah, it is a biotech company. It focuses on the research, development, and commercialization of therapies for basically respiratory and organ fibrotic diseases. So like cystic fibrosis, that kind of stuff. Intermune spiked up on monstrous volume on February 25th, 50 million shares, $38.73. So in these biotechs like the IBB, these things are coming back up to this high. You have, 2 million shares today, 2 million shares yesterday, 2.7 million shares the day before, 12.2 million shares the day before that. So we are going through these higher highs from that February 25th break, and the volume is very light. Like I said, though, I think you can get a day or two, maybe 3 of a spike up where these things hang out with higher volume as we go into the summer and get some of these late to the party shorts squozing out of the market. Could it fail instantly? The answer is yes. The problem with that, though, is coming back, you're going to probably see very light trading on Tuesday till probably late in the afternoon. And that means that normally you don't come right back and see the market down 50 points. I think you probably spike up, get the last of any shorts out of the marketplace, and that's where you're going to see your 30 or 50 point open down if you are looking for that kind of thing, which I am. But I think we're still waiting for that huge trap like rats gap down that we have not seen so far that could come. But Intermune, one of the biotechs. I guess we'll look at IBB when we come back. You can still give me a call. Oh, I got a call here. Marie from Erie, Pennsylvania. We'll be right back with her.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
And we're going to go right to Marie in Pennsylvania. How are you doing today, Marie?
Oh, we're doing great. We're finally getting some spring.
Well, we've had that since February down here. Now we're getting the kind of the August dog days getting ready to start. So I'm kind of miss our spring here as we go into the real summer of Florida. Anyway, looking at Frontier Communications FTR.
That's right. I've been in it since $4.79 and have a nice gain. And I had actually planned to hold it long term because I like the dividend. But I start looking at it, and I wonder, this big downturn yesterday has got me concerned.
Yeah, I mean, this thing really ran pretty much on the back of the whole Time Warner, not Time Warner, what's the other one? Not Time Warner, Comcast merger talks, and also on the thought that if you have a last mile to a consumer, that you can basically charge Netflix and the rest of these folks a subsidy to carry their packets to them, and that ran fairly decently. I think what you're just seeing is a little bit of a pull-off here, and as probably that deal is somewhat maybe up in our that whole big deal would be it. But I think the idea is it ran thinking that it would be a huge buyout opportunity, and now it's kind of that whole opportunity is fading a little. But, I mean, you had a legitimate breakout. I would have liked to seen a sign of strength, which I didn't really see other than the first one that you had that went up to 515.
Right.
On that. So, I mean, the question is, is that really the breakout? I don't like that it pulled right back in and then went back up. So, when did you buy it?
I bought it shortly after the breakout at $4.79.
I mean, you're fine out here. If you want to hold it for the dividend, I'm looking at their books. They're not all that great.
Yeah.
So I'd probably be looking if I wanted to hold a dividend stock a little bit more, but I would look at this thing probably Tuesday or Wednesday or Thursday, and if this thing is not really got some volume coming in back on the other side, I'd probably have to consider selling it.
Yeah. I have a stop at 535, but, you know, you hate to give up all this gain.
I mean, it's a nice gain and everything. It's, I think you probably got 2 or 3 days, and if it doesn't really start acting well for you, I'd probably get rid of it next week.
Yeah. Okay, that's kind of, I've been thinking about tossing it because why let the money kind of drift away here?
You're kind of on the right side of this thing, but once you go about $5, then it's shortable again. And my guess is you're probably going to have some shorts on this thing. You may get that opportunity I've been talking about where you get a short squeeze into next week, and maybe you get back up to that $6 area again. The volume's light. I'd probably take my cash there too.
Yeah.
So.
Okay. Well, thank you so much.
You bet. So we got people talking in the den here. Andy says he loves silver. I'm going to ask him why doesn't he marry it? But he'll be on here shortly, and he can explain his love for silver and gold, I guess, probably too. Probably. It sounded like he likes silver a little bit better, up to 18 cents today. Anyway, we were looking at a couple. Oh, I wanted to look at the IBB. Oh, and we're out of time. How can that happen? Things just fly like a day like today. Anyway, hope everybody sells when they can, not when they have to. And I'll see you here tomorrow. Same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.